Welcome back to the Deep Dive. Today, we're cutting through the quiet of December 27th, 2025, because, well, the markets are anything but quiet.
That's right. Our mission today is pretty surgical. We want to give you the critical analysis you need on three very distinct drivers.
First up is the central bank's new liquidity maneuver. Then there's a huge catalyst shaking up the AI sector.
And finally, we'll look at this incredible split in risk appetite. You have traditional assets like gold on one side and digital assets on the other. It's a real divergence.
So we're starting with the macro environment. The New York Fed is doing something that's changing the game at the short end of the market. What is it?
They're calling it reserve management purchases, or RMP for short. And it's a very technical move. Basically, they're buying short-term debt.
Okay, so the immediate question is, how is this not just quantitative easing or QE all over again?
That's the key question, right?
Yeah.
And the difference is the target. QE was about buying long-term bonds to lower rates across the board. RMP is laser-focused on the short end just to keep the plumbing of the overnight markets running smoothly.
So QE was the bulldozer, RMP is more like the maintenance crew.
Exactly, and the scale shows it. It's about $40 billion planned for the first month. The market sees it as a technical tool, not broad stimulus.
And what's the data telling us? How are yields reacting?
Well, that's what's fascinating. The 10-year Treasury yield is holding really steady, somewhere between 4.13% and 4.16%.
So the market believes the Fed's story for now. They don't see this as a big inflationary move.
Precisely. The bottom line is that this RMP has created a very cautious, event-driven environment. Everyone is watching to see if this technical tool starts to have a wider effect.
All right, that's the macro picture. Let's pivot to tech, because one company is driving everything right now, and that's NVIDIA.
It is absolutely NVIDIA.
Yeah.
Stock's been trading in a tight range around $188 to $191, and it's super sensitive to news.
And the big news is this deal with Grok. What exactly is it?
It's a reported license and talent integration. And I have to stress, it is not a full merger. It's about NVIDIA licensing specific tech and, bringing on key people from Grok.
And Grok is all about inference, right? The actual running of AI models.
Exactly. Inference is the next huge frontier for monetization. So analysts see this as NVIDIA trying to completely dominate the entire AI ecosystem, from training to deployment.
It's a massive catalyst, but there's always a catch.
Of course. Execution and regulatory risk. The market needs to see how this actually works, and you can bet regulators are going to take a very close look.
And what about the other big tech names, just quickly?
TSLA is all about deliveries, and its AI robotics story. It's near $480. Meta and Google are steadier, just focused on monetizing their existing AI.
Okay, which brings us to our third and maybe most complex point, risk sentiment. It feels like the market has whiplash.
It's completely divergent. You've got stability in some places and just extreme fear in others.
So let's start with the VIX, the fear index.
The VIX is actually pretty low, somewhere between 13 and 16, so broad equity investors aren't panicking.
But then you look at crypto.
And it's a totally different world. The crypto fear and greed index is deep in fear, extreme fear territory. We're talking a score of maybe 20 to 30.
Wow.
Yeah, it's because leverage is still being washed out of that system, and that's driving all the volatility.
And at the same time, hard assets are just soaring.
I mean, it's historic. Gold just hit record highs, near $4,500 an ounce. Silver is up there too, around $77. This is a classic flight to safety.
So with gold hitting records, where does that leave Bitcoin?
Bitcoin is sort of stuck, oscillating between $85K and $90. It's really struggling with those internal crypto liquidity issues.
So what's the key takeaway from that divergence?
It tells you that in this moment of tension, the money is flowing back to historical regulated safe havens. The BTC gold ratio is around 19.3, showing that momentum is really shifted back to gold for now.
So bringing it all together, what is the overall focus for the market in the short term?
It's all about those liquidity signals from the RMP on one hand and the big event drivers like the NVIDIA Grok deal on the other. It's a very reactive market.
And the strategy recommendation?
It has to be risk control. For your core ETFs like VOO or QQQM, use a phased approach and keep some cash ready.
And for the really high-risk stuff like pre-stocks or HYPE tokens,
you have to be extremely cautious. The message is to verify everything, contract addresses, custodianship. The risks there are just immense.
Okay, so let's land the plane on this. The Fed is managing liquidity in this new technical way with the RMP. We have a flight to safety in gold, while crypto is dealing with its own internal fear.
It's a historic divergence. The world's most traditional store of value is at a record, while the most modern one is struggling.
So the final thought, the structural question you should be thinking about, goes right back to the beginning. We know RMP is supposed to be technical, but the big debate is this. Will it just stay a maintenance operation, or will it functionally create a kind of quasi-expansion in the financial system over time?
Right. Will it end up acting as a subtle, continuous form of stimulus? That ambiguity is really what's going to define the start of 2026. Keep a close eye on it.